Greetings, ladies and gentlemen. Welcome. It is the Crypto Crow, and it is Sunday. We are continuing our first weekend of content in years, so hopefully this finds you well. And let's just jump right into what's going on. Grayscale's Ethereum price falls below $700. Bitcoin to 9,000. This is scary. 2017 is in full swing at Grayscale, where one Bitcoin is just about over $9,000, a price level first reached to a wide applause of memes about 5 years ago. Ethereum is not faring much better, with it going to $660 at Grayscale Ethereum Trust, a price 45% below the global market rate of $1,200. That makes this the worst year ever for Grayscale Trust since they first launched in 2013, and sentiment has gotten worse still after Genesis paused withdrawals. There's a digital currency group subsidiary, as is Grayscale. Genesis had $170 million of exposure to FTX, but considering the vast holdings of DCG, you'd think they're small potatoes. Barry Silbert, CEO, could himself perhaps cover that $170 million, as he's worth over $2 billion. But the fact that they haven't been able to do so far may well indicate DCG is running a tighter ship than it might appear. Growth in their products has stalled, even contracted, with the bear beginning to bite who wrote this shit? What is this? Growth in their products has stalled and even contracted, with the bear beginning to bite while sharks go hopping from project to project to see what might fall. Okay, somebody's trying to tongue twist, folks. Due to security concerns, we do not make such on-chain wallet information and confirmation information publicly available through a cryptographic proof of reserve or other advanced cryptographic accounting procedure, Grayscale said. That courted some ridicule because public key cryptography means you can safely share your public key, except this isn't Grayscale's policy, but Coinbase's, their custodian. Coinbase has always refused to publish their public addresses. Unlike many other exchanges that have one or a few big cold wallets, Coinbase chops up theirs in tons of addresses with balances of 5,000 to 10,000 Bitcoin. You know, everything that I'm seeing, we hear a lot of stuff about the Great Reset. And there's a part of me that wonders, let me take a look at something real quick. And I'm going to do this on my own. But so that was 2017, and then 2019 price. Wow. And then 2020 price. Okay. There's actually a part of me that's kind of wondering if all of this great reset activity has anything to do with resetting the crypto market back to like 2018, 2019, 2020. At which point, what will the bottom actually be? And because if you think about it from an institutional perspective, and you think about it from a global perspective, all of the institutions, all of the major players that were establishing like their trading desks and all of their different investment vehicles, potentially the inclusion of a spot ETF coming, all of these different variables associated with finance vehicles in the space, right? If you were a controlling arm of any financial institution with political ties and political power, and you were aware, let's just to say that like a lot of this stuff is by design, not by accident. Let's just assume that for a minute. And you understood that the cryptocurrency technology were not a fad, and that it's going to continue pushing forward in significant ways, likely exponentially over the next several years at minimum. Where would you rather you be able to really dive in with this whole FTX fiasco, with everything going on in the space? Okay. How much of this is by design? I have to wonder. And how much of this is going to push the cryptocurrency market much lower than what traditional trading, traditional market cycles might otherwise dictate without this influence. Do you get what I'm saying? And that's a part of why I believe we're going much lower in Bitcoin, Cardano, and everything else. It is not just based off of market cycle pricing. It is not just based off of what we've seen in the past, because where we're at on a global level is significantly different than a place we've ever been since 2009. Let's just say that. And so when I think about this stuff and I think about the time frames and the things going on, I can't help but feel like we may very well see. I don't think we're going to see a $4,000 Bitcoin again. I definitely don't believe that. But when I say $9,600, I absolutely mean it. And I think that there's a lot more in play to ensure that happens than just traditional, like, oh, this is the price action of this 4-year period, that 4-year period. We calculate the differences, time scales, and all of that. I think there's a lot more going on. And I think that a lot of these major power players in finance on a global level are looking to get into the position, especially, I mean, Bitcoin will rule them all to a large degree as a global store of value. And, altcoins will obviously, like Cardano, and I'm sure even Ethereum are going to play significant roles in the growth of the cryptocurrency ecosystems as a whole through a variety of use cases and things. But, in a nutshell, I know I'm not clarifying this properly or probably in a very clear way, but hopefully you catch my drift. I think that there's a lot happening behind the scenes that the general public is never going to be privy to. And I think that due to that, we're going to see substantial lower price action for a little while. Be that as it may, crypto's not going anywhere. And, I think that the people who have already signed off, just like we saw in 2017, 2018, people ran away and, oh my gosh, I bought at the peak and now I lost all this money. Crypto's BS. And, how many of those people came back and reinvested once they realized, oh, this is a cyclical thing? Well, for whatever reason, sometimes I make little predictions like this and I wish I could mark them for the future because I always want to come back to them. But I believe that this may very likely be the last bear cycle, if you will, for many, many, many years. Because if this great reset is anything like I expect it to be, I think this is going to truly change global finance on a significant level, which is one of the reasons why I believe that a lot of this FTX stuff has happened, why there's so much contagion, why I believe that the regulations are going to be forced to start really taking action. And what generally happens with any sort of policing or control in anything, it's all to protect the people. And ultimately, and the people can also mean protect institutions, protect companies, protect significant donors to political campaigns. Okay, a lot of different things. I think you get what I'm saying here. But yeah, I really do think that this could very well be the last bear market. And I think that this bear market is going to be, I think it could likely end up going against everything we know, because of a lot of otherworldly pressures to do so before we start to take off in an entirely new digital economy moving forward. But that's just my thought. I think XRP in the lawsuit may play a role in that as well. XRP might offer a discount in short term as signal flashes. XRP up 2.58% in the last 7 days, outperforming top 10 cryptocurrencies and weekly gains. An opportunity may soon present itself for XRP dip buyers if the scenario portrayed by the TD sequential indicator plays out in the short term. This is Tone Vase. Tone Vase is a major TD. It's Tom DeMark's sequential indicator. I have books on it. Tone Vase actually got me looking into it. And, that's his like 95% of what he does is based off of the TD sequential. And he was actually nice enough years ago to gift me his version of the TD sequential indicator on TradingView. So I don't even know if I still have that. I think I do, actually. So thanks to Tone Vase for that. According to Ali Martinez, a crypto analyst, the TD sequential flashed a sell signal on XRP's 4-hour chart, which might suggest an incoming price decline to 36 cents or even 34 cents. At its current price, a drop to 34 cents would represent an 8% discount. So that's cool. We'll see. Top Ripple lawyer says company effectively operating outside of the U.S. due to impact of SEC lawsuit. Oh boy. Ripple Labs top lawyer says that the company is essentially operating outside of the U.S. due to the lawsuit by the U.S. Securities and Exchange Commission. According to a recent report by CNBC, Ripple General Counsel Stuart Alderety. I have no idea. Sorry, Stuart. Says that even though most Ripple employees are based in the U.S., most of its customers have been driven to other nations because of the regulatory agency's case against the payments platform. You know, if Ripple were to somehow win this case, this could be like cause for like damages and other follow-up suits, I would think. I don't know. My guess is they're going to settle at some point, but yeah. The SEC alleges that Ripple Labs sold XRP as an unregistered security. Essentially, Ripple customers and the firm's revenue are all driven outside of the U.S., even though we still have a lot of employees inside the U.S. As for the SEC's lawsuit against Ripple, Alderety says that he expects the judge to make a ruling in the first half of 2023. That's going to be such a big deal. Says Ripple's legal counsel, we are at the beginning of the end of the process in our case. He also noted that Ripple plans to still work very closely with policymakers in the U.S., despite their disagreements with the SEC, according to the report. According to their lawyer, Ripple is looking to expand their operations in Europe as they currently have plans in the works to obtain a virtual asset service provider license from the Central Bank of Ireland as a means of passporting its services throughout the European Union. So, yeah, you know, there's definitely a lot of stuff happening, and I've already shared the majority of my thoughts on a lot of it. I think that the next couple of years is going to be so pivotal for the cryptocurrency space. And, you know, for those of you that are new to the space and you're still trying to feel things out, number one, I do have a master course that I'm working on with like 45 lectures in it already. You're going to learn everything I know and more. I'm even bringing on other people who are just brilliant in their methods for, you know, things like technical analysis and other things that are basically contributing to this course. I will be announcing them when the course is complete, but that'll be a really great place for you to learn a lot and get grounded in the cryptocurrency markets before you really start to move forward. But outside of that, it's scary but exciting at the same time, because I feel like I have a pretty solid understanding as to what to expect. And with that, I feel like I have a bit of an understanding as to what sort of projects are likely going to blossom and bloom and move forward and grow over the next cycle. So we'll have to see, as I always like to say, we'll have to wait and see how that happens, what comes of it. But it's Sunday, folks. It's time for me to conclude my weekend, and hopefully you've had a pleasant weekend, and we'll see you on Monday, tomorrow, for you. Until next time, crow your coins, and I'll see you soon.